Today I have a very important update about the Bitcoin price, because we have one problem. My main scenario has been this. Price moves down, retail quits and sell their Bitcoin to the whales, who accumulate and price go up. And to confirm that interpretation, we like to see a bottom pattern in the chart, along with a trend reversal of the trend as proxied for me by Lars Online. And we seem to be getting that. Left shoulder, head, rejection at resistance, right shoulder, and off we go. Now, there is only one problem. The neckline of the head and shoulders pattern is set by the highest point between the left shoulder and the head, which came here in August last year. We see that the candles closed around here at 24,400 with wicks up to 25,200. But now we were kind of rejected before that. Now candles only reached up to 23,750 and the highest wick up to 24,200. So you see the candles here, now the candles were here, the highest wick, now the highest wick was here. So we didn't kind of reach up to the resistance. And then what happens is that this neckline starts sloping downwards. And if we want this to be a bottom pattern, we want strength, right? We don't want it to slope downwards. That's weakness. It becomes questionable if this even is an inverse head and shoulders pattern in that case. And at the very least, it's a lower confidence bottoming pattern. Perhaps this is not done yet. Perhaps we move up a little bit first, actually hit that resistance, then move down to some support level that holds, letting CTO buy more Bitcoin with a controlled downside, and then blast through the neckline. I almost never take leveraged position, but if that happens, breaking that neckline here, that's a very high confidence entry. And if we don't have too high leverage, we can survive a little fake, and then perhaps we blast off and we send this Ponzi to 100k and beyond. That would be nice, but we didn't manage to reach up to that resistance level. Instead we got this sad sloping neckline. So maybe this main scenario needs to go back to the drawing board, or at the very least have an alternative second scenario also, and to see which one seemed to be playing out. Of course, anything can happen. I'm not saying it must be one of these, but I always felt that it's helpful to have a couple of main scenarios to try to understand what is going on, avoid the stress of being taken by surprise the entire time, and also be ready to act and take action when action is due. And now, maybe some of you remember almost 2 years ago, in spring 2021, I talked about this possibility that this whole move is a wyckoff distribution. Those of you who were here, you remember that spring 2021, the general sentiment was that, this is just a small correction on the way to 100k and beyond, laser eyes are focused. Then it kind of didn't happen, because the whales were successfully manipulating everyone's emotions. So what is this wyckoff distribution then, and who was Wyckoff anyway? He was a smart guy, born 1873, 100 years before me. At age 15, he took a job as a stock runner for a brokerage, and while still in his 20s, he became head of his own firm. And from his position, he observed the market activities from the legendary stock operators of his time, including JP Morgan. Mr. Wyckoff observed numerous retail investors being repeatedly fleeced. Consequently, he dedicated himself to instructing the public about the real rules of the game as played by large interests or smart money. So these models are over 100 years old. And they still work, because this was exactly the playbook that the whales used in 2021 to trick almost everyone on crypto Twitter and the like. And now it could be happening again, but this time it's accumulation. Bear with me here. We go through this a little bit in detail, both what would happen in 2021 and then look at today's situation. Right now this will look a little bit small, but don't worry, I will take you through it step by step. Let me just show the similarity first, just looking at the picture. PSY, PSY, BC, BC, AR, AR, ST, ST, UT, UT, UTAD test, LPSY, LPSY, SOW, SOW, LPSY, LPSY, and then down we go, down we go. So how can it become like that? It becomes like that when large players have enough money to manipulate the price up and down pretty much any way they like. That's what happened in Wyckoff's days, that's what's happening today. This is not some random coincidence, and you will soon understand why. Because this is manipulating people. This is manipulating our psychology. And people don't change in 100 years. We work the same. So the same methodologies work. So if we zoom out first, we have to understand that this whole move is just a way to offload Bitcoin, to offload coins that the whales have accumulated somewhere down here. Now they want to sell them. So how do they do that? Because if they just start selling, price starts crashing, then they get bad prices and there are no buyers. So they need to be smarter than that because they have a lot of volume to sell. Then the first step is this: PSY, preliminary supply, where large holders begin to unload shares in quantity. Price goes down a little bit, but then it continues. Retail is going crazy here. It's a buying climax. We're missing it. We need to buy Bitcoin. It's almost at 60,000. While the large holders, they offload here, selling into those retail orders. Price goes down in an automatic reaction. Secondary test. Price revisits the area to test the demand and supply balance again. See how much interest is there really. Then comes the first real fake. Note here that this was the low before. Now price drops below that level. Then what happened? Some risk-conscious people feel that, we made a lower low here. Maybe it's over. Maybe they bought here in the buying climax. Now this was the stop loss level. It was a natural place to put the stop loss at. Little bit below this level maybe. Now that stop loss hits. And there will also be people who feel, we're reversing, better short, so they're loading up on shorts here. But what happens? They drive the price in the other direction instead. And not only do they drive it a little bit up, in an upthrust, UT stands for upthrust, they drive it above the previous high here. What happens then? FOMO, max FOMO. It broke out, we made all-time highs, we miss it. We sold and shorted here, now we need to buy back. Just bite the bullet and buy the coin. So people are buying here. What happens? They drive the price down, stop loss hits again. They're distributing here. But then another upthrust after distribution, again driving it above the previous highs. We're above 60,000, 62, 64,000. FOMO is insane here. People buying. What happens? They drive it down. Now people are thinking, they're not going to trick me this time because what happened here was that I sold, or here I sold. This time I'm not going to sell. And sure enough, price goes up again. But they drive it only to the last point of supply. Now the whales are almost done selling, so they distribute the last here, and price never goes above these previous highs. Instead, they finish the charade, they sell a little harder, and allows price to drop. We have a sign of weakness, another last point of supply, and down we go. And they tricked everyone from start to finish. Managed to offload large quantities of coin at amazing prices. And then they kind of did the same thing one more time. Same general psychology. You drive it a little bit above the previous highs to trigger max FOMO and max opportunity to offload coins at as high prices as possible. And down we went. So what's happening now then? What happens after they have sold? Do they pack up and go home? Probably not. This was probably a very successful game. Why not go back to the casino and try to play it one more time? And what do they need to do then? They need to buy back. And as you know, this was my original thesis. We can see it in the charts here. There was a huge number of coins changing hands down here at 16,800 something. And it was not retail crypto Twitter buying because they had packed up and gone home. It was large professional smart money buying here at the bottom. When we saw that in the chart and then this resistance level started breaking up, that's why I bought here at 17,400 even before the gold flip, which was otherwise a solid entry as well. And I shared all this with you at the time. But maybe this wasn't enough. Maybe they're not done accumulating yet. And if that's the case, they can't just start letting it run now, right? They don't have enough coins yet. So how do you accumulate a lot of coins at the lowest price possible in big volumes without price starting to run off before you're done? Wyckoff got you covered. Amazing website. You see the URL here. Definitely recommended reading. So let's scroll down to the accumulation handbook. How did smart money accumulate stocks 100 years ago? They did like this. And now we will compare how this matches the current price action so far in Bitcoin. Let's first just look at the picture. And of course this comes from higher level, and when looking at it like this, of course this looks big and complex, but remember that this is just a small accumulation area before the reversal, if this scenario plays out. And look here, we're coming from above, PS, down, SC, SC, AR, AR, ST, ST, down, ST in phase B, ST in phase B, up. If this scenario continues playing out, we're right now at that point. So is it, and does it align with the sentiment? Could it be that this psychology is playing out? Let's look at the details. So PS stands for preliminary support. That's where buying begins after the long down move. And that was here just below 30k. At that point I felt that this might be the entry, and sure enough there were buying action here, but they were not done. We got another down move, and SC standing for selling climax. That's the panic selling by the public. If we can zoom in here, it was quite big volume. Same as the preliminary support here was big volume. So they got lots of coins there, both here and here. Then when the pressure stops, there's an automatic rally in the other direction, AR. Then there's a secondary test, where they test the supply and demand balance, get insights about the market. Then comes the first fake. They run it above the previous levels. We're making higher highs. We broke out of this resistance. People going long, people buying back. What happens? They dump it hard, liquidating everyone. And they don't just run it down to any arbitrary level. It's very important that they run it below the previous lows. Because if you enter somewhere here, where would you put the stop loss? You would probably put it below the previous lows, somewhere here. And if you're looking to short with high confidence, a natural place to short would be at new lows, confirming that we're going lower. So people sell, people enter shorts in big volume. Look at the volume bars. And what happens? Do we go lower and everyone get to make profit, and those who sold get to buy back lower? No, we run the price hard, 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 hard up with no rest, no retracements, just day after day higher. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and barely any pullback. 15, 16, 17, 18, 19, just a straight line up with no pullbacks almost. Sidelining everyone on crypto Twitter writing angry tweets, every comment on every YouTube video is angry, everyone missed it, people who shorted got liquidated. Then they run the price all the way up here. Then let's go back to the playbook. So they run it up somewhere here. But according to the Wyckoff playbook, this is not yet the time to run it above the previous highs. Because that could also have been a good fake, but if we're the market manipulating whales and following the playbook, that's not the playbook. We stop below the previous high, which is exactly what happened. We stopped below the previous high. So if this is indeed the playbook, what would happen from here? Well, it comes something very important as the next step. The next step is the spring. And you see, now they run the price below the previous lows. A spring takes price below the low of the trading range and then reverses to close within the trading range. This allows large interests to mislead the public about the future trend direction and to acquire additional shares at bargain prices. A terminal shakeout at the end of an accumulation trading range is like a spring on steroids. So the playbook is to run the price below the previous lows, causing everyone to panic, everyone's stop loss to hit, new people to short, all the tweets on crypto Twitter is that we're going lower, and then what happens? Do people get to make money on their shorts? Do people get to buy back lower at whatever level they intend? No, they run it in the other direction instead. Next step is the test. Goes back in and tests the market for supply. Can they buy more at bargain prices? Great! And if there is a lot of supply, the market is not ready to rally yet, then they happily accumulate it. And it runs up, last point of support. Then comes the first real sign of strength. There is some backup, last point of support, and then we're off to the races. And only here somewhere the public starts to realize what is actually going on. They're gonna FOMO buy here somewhere. And now they don't need to do anything more. Now this will run by itself, by everyone who get liquidated on their shorts, everyone who sold the bottom have to buy back. And this is the point where this can go multiple X to whatever number, who knows. and they sit with entries down from this area. As you know, I sent out Hodel Sachs socks to all our members, so no one forgets this. And we get just amazing photos back. I'm laughing so much. Thank you everyone for sending them. I committed socks for $100,000. We still have socks left, so if you join now, ctolarsson.com, you will get them too. Hope they will keep your feet warm and your mind cool. Thank you, tack. CTO Larsson out. Hej då!